Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 14th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, with the euro closing above 148.50, we should now see a follow through to 149 and 150. At this point, if the market doesn't continue supporting the euro, we could see a reversal based on lack of buyers. Only time can tell at this point. In the news, it's earnings seasons and the equity markets need that extra push to get over the 10,000 mark for the Dow Jones. If the equity markets continue higher, we definitely expect to see 150 hit very soon and the 150 level then acting as support for the euro. The sterling, on the other hand, is running into resistance near the 159.20 level, consolidating in the middle of the recent range. Swissy is pressuring the buck lower but needs to close below 102 in order to confirm further downtrend. And finally, the yen continues to consolidate after the recent bounce off the 88.20 level. We're looking for the equity markets to drive the Forex market in the short term, so keep an eye on equities. Let's get started. Euro dollar on the graph right now, currently trading at 148.57, closing above the 148.50 level in New York. First level of support is not going to be the 148.50 level, but instead going to be the 148 even. Below that, we'll see 147.50, 146.80, 146.20, and 145.61 follow. Levels of resistance are going to be 148.80, and above that we'll see 150. So once again, we do anticipate the euro to continue heading higher now that we've closed above this 148.50 level. If we take a look, we've now broken this, was the recent pivot high right here. We've broken above that, had a pretty strong close above 148, and 148.50 now is signaling us to continue heading up to the 150 level. Next up, we have the pound dollar, currently trading at 159.17. What we don't like about this is once we've established the range, we clearly try to break above that. That didn't work. Tried to go lower, got stopped at the 158 level, tried to continue lower toward the 157 level, but look at this bounce yesterday. We bounced right back up to our to within the recent range, right in the middle. Okay, so today, or actually over the next couple of days, it's going to be important to see a breakout either lower or higher. We don't want to see a continuation within this range. We don't think it's going to continue because this recent volatility that we've seen over the last couple of days is definitely pointing to market activity, price action. There's a lot of volatility here. Traders don't know which way to push it. It tried higher, it tried lower. So hopefully over the next few days we'll get a real sense of direction. Looking at the dollar Swissy, and let me cover the support and resistance levels. Currently trading at 159.26. First area of resistance is going to be at 160. Above that, 161.20, 161.50, 162, and 163.50. If the dollar continues to get better, we're going to see 158 as the first level of support. Below that, we'll see 157, 155.80 below that, and 155 and 153.30 follow. Looking at the dollar Swissy, we've now broken below our range. We've closed below that. So what we're anticipating here is a continuation of further dollar losses, looking down to the 101.30 level. Now we could of course get the bounce off the 101.50 level for a double bottom. We have this bottom here and one more bottom here. So it's too early to tell. We've matched recent pivot low. So now we could definitely see a bounce. And if we expect a double top of the euro, which unfortunately broke the recent pivot high, it's possible that we can still see a dollar rally. Really depends on fundamentals at this point, and whether or not traders think the economy is going to continue improving, whether it's going to be a run for a safe haven for dollar assets. Whatever the reason, we think that there is possible dollar run. Still, that's a possible play. In the meantime, the ranges are as follows. Currently trading at 102.13. 102 level is going to be the very, very short-term low, first level of support for the dollar. If we see a bounce, it could be off the 102 level. 101.90 follows. Below that, we'll see 101.30. One thing I'd like to point out here is on our graph, we also put in the 101.80 level as a sign of support. A reason why is because the 101.80 level is really a fractal point. We could see a bounce to the 101.80 level before a bounce higher. We could see some support there. 101.80, 101.90, and 102 are all very close together, 20 pips here. So take it with a grain of salt as to which one is more which one is more important. Most likely the 101.90, just because that's exactly where we had the two pivots. Okay. First level of resistance can be found at 102.40, followed by 103.20. Above that is 103.55 and 103.80. Above 103.80, we'll see 104.50. Dollar yen. 89.70 is the current rate. First level of support. Now I want to point out, we had these lines drawn yesterday. Look at how close the average was. It was within 80 pips. 89.40, 89.50 was the low, and 90.20 was the high. Perfect bounce off the top and off the low. These are going to be our ranges for the day as well. 90.20, 89.50. 90.20 is the first level of resistance, followed by 90.80. Above that, we'll see 92, 92.50, and 93.20. First level of support is going to be at 89.50, followed by 88.20, 87.12, and 85. What we want to point out here is, again, we bounced off the 89.20 level. We do anticipate this pair to continue somehow consolidating towards the 87 level. Not consolidating, but pushing its way towards that 87 mark. However, in the meantime, we have to stick with what we get. I think we're going to look for equities to push us in the future, so in the next couple of days. So keep an eye on the equity market, specifically the Dow Jones. All right, everybody, if you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 14th, 2009. Until tomorrow, good luck trading.